Hello everyone. As always, just checking if you can hear me. If you can hear me, just go to your where the questions are and just tell me if you can see me in the first place and if you can hear me in the second place. Yes, yes, or just yes is good enough. If you can't hear me or see me, just put no. Jonathan, yes, yes. Moab, yes. Okay. Let's start. Enough yeses so for me to go ahead. Welcome, guys. Um, Let me just put this away. Distracting my webcam is at the wrong place. Welcome, guys. Now, first off, as you know, my name is Theunis Kruger. I'm an FX trainer for South Africa. The role of fundamental analysis in online trading. A lot of guys is gonna, especially the guys that's been to some of my seminars and workshop, is gonna ask me why do I even do a seminar on this? Because normally I tell the guys what it is, and then I tell them it's not necessary to know a lot about this, but to know when the news are. Because to really know, to be really a fundamental analysis trader, you have to be an economist. You have to know a lot about economy and political events, economic events, what it means. And that is exactly the purpose of this webinar. So many people tell me no, but I'm wrong. You can use technical or fundamental analysis to trade. You can trade during news. And I suppose there is some gifted individuals that can do that more but for the most part, people lose money that try news trading. Right. So what I did, my purpose with this webinar, the role of fundamental analysis in online trading, is to give you an idea of, if you decide you want to do fundamental analysis, what the kind of things are that you need to know. And as you'll see as we progress, you almost need a degree, or you need a degree. And even if you have a degree, sometimes it takes years of experience for you to truly understand and to see the nuances, to get insight into what these things mean. And even then, guys, there's a difference between what people say and what they do. Sometimes these guys expect the news or the prices to go up because of interest rates or whatever, a combination of many things, and then it just goes down. So people say things, but what they do is the most important thing. So even economists, even fundamental analysis traders must look at a chart in the end. So, but yes, there is a place for it, and if you there's a few crucial things that you can know. And my purpose with this, I've actually got a second one that I'm also planning. This one is a little bit more theoretical, going through all the concepts with you. The second one will be a little bit more practical. So when news affects trading and what does it mean for us and so on, right? So let's go on. Before we go on, I just want to say another thing, that this is a group-based presentation. So I know Bilal did another one as well. But there you're going to find another thing that's interesting. And that is, even if two people present the same topic, because they're different, because they're unique, because they've got different perspectives, you're going to learn something anyway. I do that a lot. If there's somebody that's really good at something, I go and listen to them. Because you will, even if it's the same topics, it's different people, you listen to them and you learn from their different perspectives. It actually gives you insight as a person. So, okay, so that I just wanted to say that, because I know Bilal a few days ago also had a webinar on fundamental analysis, right? And it's basically the same underlying things that the structure of the presentation. So the value is going to be added in my insight, my perspective. Okay, I always like an introduction, so basics, and then we're going to just talk about what it is, what is fundamental analysis, how to start, how to analyze a country's economic conditions, what is the type of things you look at. Oh, somebody says, Abu Bakr says it's yesterday. Yes, okay, that's right. We're going to look at some non-economic factors that affect it, comparing major currencies. and then disadvantages of fundamental analysis, and then questions and answers. Like I said, my purpose is not to try and make you an economist in this. I'm just trying to explain the different factors of it, so that you understand that for somebody to really say that it's a fundamental analysis means that he understands those nuances. He's got the insight into how these all things fit together, and it's a pretty daunting task, guys. Most of the big companies that do this have whole departments that actually do it. So this is not something for small retail traders, right? So what is the difference? As we know, fundamental analysis has to do with the price that is affected, that is changed. Price movement is caused by economical, environmental, political factors. And what these, if you do a fundamental analysis, you study the cause of market movement. All right. So if you just think about that, you're trying to decide beforehand, looking at different things, different reports, but not even just different reports. The background of it, what is going on in the country, what is going on in the industry in those countries. You're trying to get all those things together to get a picture of what might happen. You will never, I repeat, you will never know exactly what happens. So that is just a principle in the market that you must understand. You will never ever know. Nobody can say they know exactly what's going to happen, not even 10 seconds into the future. There's simply too many variables, too many deciding factors, especially in these markets. There's thousands upon thousands of people trading these markets for various reasons. So although fundamental analysis can give you an idea, it can never tell you exactly what's going to happen. Right. So technical analysis on the other side has to do with studying the price chart, the price on the price chart, trying to the formal definition according to John J. Murphy in technical analysis of financial markets. It says technical analysis is the study of price charts for the purpose of identifying the next or the new trend in its early stages, right? So it's totally something different. That studies the effect of the market movement. Doesn't matter what people say, you see what they're doing. And like I said, even the fundamental analysis guys must use charts, because even if you think you know what's going to happen, that might not happen. So you must actually look at the charts to see what did happen, the effects of those market movements. Right. So that is something I want to stress a lot. Even though I'm going to talk about fundamental analysis, I'm not trying to train, and I never expect you to become an economist. Right. That's a thing you have to study for, and it takes years of experience. And even guys that studied it and that has a lot of experience, sometimes, especially you'll see that in the news, you get 4 opinions, all experienced guys, and they give different opinions. They have different angles, different perspectives. So I'm in actual fact trying to warn you about the belief that by studying fundamental, by doing a fundamental analysis, it's actually gonna improve your trading, improve the places where you set your entries and stuff like that. It can't. It can give you a general idea of the direction, but it can never tell you exactly where to enter and so forth. And another thing that is very dangerous is because there's only 3 people or 3 groups of people that's involved in the market. You've got your buyers, your sellers, and then you've got people on the sideline waiting to either buy or sell. Now, the problem with news is, yes, there's a lot of guys trading, but a lot of guys, and I mean a lot of guys, also realize that you can't, it's difficult to take positions, so they sit on the sideline. So there's huge spiky whipsaw movements you see, especially in the lower time frames during news times, are there for a reason. Lots of guys are not willing to trade. They're sitting in the sideline, so that the price, there's not a lot of liquidity. There might be a lot of volume, yes. Huge guys trading, taking longer term positions and so forth. But for us as retail traders, it's a very, very dangerous thing. Whipsaw can ruin you all day. Okay. So especially if you've had a position that's open and you were thinking maybe the news goes in your way and it whipsaws, it can take you from a very profitable position, whip you out, and even jump past, give you some slippage on your stop loss, and that's not a good way to end your day. So to start your day if the news is early in the market. Right. So again, we're going to look at the different aspects of it. And yes, as you, especially if you've been trading for a long time, you will pick up which is the reports and the things that you have to look out for. That is very important. That are very regular. That's why I'm going to also look at in the second part. I'm going to show you the economic calendar. Small news events, not really necessary, but large news events can swing the whole market. So it is imperative. It's very important that we are aware of when these things happen. Right. But let's go a little bit deeper into fundamental analysis. Right, like I just said, fundamental analysis has to do with the price that is influenced by all sorts of different things. Political reports, political events, environmental events, yeah, lots and lots of stuff. Political, economical. There's a lot of things here. Rumors, rates that go up and down, employment, geopolitics. A name for very large, unexpected events, like for instance, a tsunami that might happen and that cause huge, huge movements in the markets. We call them black swan events. So black swan events is rated under, is a section under fundamental analysis. It's things that cannot be predicted that cause huge movements, and you have to protect your account against those things. When you trade every single trade, you have to manage your risk. Because if you've got a nice open trade, and I've seen it happen, guys, I've seen it happen. You've got a nice open trade and you don't believe in stop losses, and you've even got some nice profits, and a huge event like this happens. It not only jumps past your stop loss, it jumps way past your stop loss, and it ruins your whole account. I've actually seen it happen before my eyes. So warning there. But normally, yes, the market's influenced by all these different things, economic indicators that come out, indexes, opinions of people, and that is partly what makes it so non-specific. I mean, these days, a tweet from a certain person can cause the markets to jump up and down. Regarding Brexit and Britain, those pairs, any opinion of any person can cause a lot of spikiness in the markets. Right. So let's jump through, or let's go through a few things that's important. It's just a formal definition. Fundamental analysis is using economic, geopolitical, and climate theories to determine the factors that will influence forex and other markets, and then to estimate further price movements based on these factors. Right. Okay. So what do you need? You decide, like, you want to put more emphasis in your trading on fundamental analysis. What do? Obviously, you will have to collect data. You will have to search news sites, get yourself some sites which you think is important to monitor. I'm not saying it's a bad idea. I'm just saying this is going to take some of your time. All right. So you have to know this. So you definitely, if you put more emphasis on fundamental trading, you'll have to give yourself more time. With the charts, you can literally open the chart, see if anything's going on. If there's nothing, you can close the chart. Not so if you mix fundamental analysis in. You need to schedule yourself time to look and to remember or to see what is happening. Okay, and you actually in your brain going to start building a database of what is happening, and that is what economists do. The guys speaking on the tellies and so on all the news sites. I mean, they're constantly reading all these things, absorbing it, seeing the relationships, and people ask their opinions. So to a sense, that's also what you're going to do. And what you must remember is the following. The less information you collect, the less data you collect, the less complete your analysis is going to be. That is why I said big hedge funds, big trading firms, sometimes when they put a lot of emphasis on fundamental analysis, then they have whole departments to collect this data for them. So again, it's a very big restriction for the small trader. Okay, and your logic, obviously, based on all this the data that you collect, you're gonna deduct what is the possible trends, possible risk, and so forth. Okay, so how do you start? Except if you go and study and get a degree. Okay, what you do is you will need some data sources, a place where you can see what is going on instantly, and always remember again a warning. Those guys that spend lots of money on their research, they're going to know things before us, the general public. If you don't spend a lot of money on that, you're just going to get it the same way the public gets it, and that's through normal news channels. Those guys, they have an edge. They do their own reports. I know some people that work in the agricultural sector, and there's firms trading there that they have their own people. They don't even wait for the government people to do the analysis and to see what the harvests are going to be. They send out their own people. They take satellite photos and so on. Obviously, those guys have a strategy based on that, and that gives them a bit of an edge. Yes, so normal guys like us can't do that. You have to educate yourself about the different economic theories. That's important. And then obviously, as you educate yourself, which is going to take time, your logic, your understanding of that will develop. And based on that, your logic of how you want to use that. Okay, so the key points here is supply and demand. Supply and demand will always be it's almost like, I always talk like the gravity in physics. Now, the effect that gravity has in physics, one of the nature laws. In trading, in online trading, supply and demand is one of those. It's one of those. Is like that. It's like gravity. So it's a fundamental basic thing. You can't mess with it. That is in the end what determines price, supply and demand. So in that case, if you're studying a bit of technical analysis, that's going to give you a bit of understanding into what moves the price. But we do that with technical analysis as well. When a guy starts, we give him a light background of these things. You just don't go too deep into it. So because if you spend too much time trying to figure out why it's happening or why it's gonna, the price might go up, you might actually miss it on the chart. So you might, even more dangerously, you might decide for yourself, no, you think the market's going to go up, and then you close out. And there might be beautiful setups according to your method before you, and you close them out because you think the price is going to go up. And in the end, nobody knows what the price is going to do. Right. Okay, when demand is increasing or decreasing for a certain currency, what happens? You have to figure those things out. You have to go and check what happens. Why does it happen? It must make sense to you. That's the main part. That's the main thing about it. What will happen when supply tightens or increases? Obviously, when supply tightens, when there's less of something, it becomes more valuable. The price will go up, and vice versa. Things like that. Right, currency pairs. Now, obviously, a currency pair, we all know that starts by comparing two countries. The one is if you've got a dollar versus a euro, you're selling the one, you're buying the one, you're basically exchanging it to them. So what happens there is because you are going more for the fundamental analysis, you will also look at the countries. So you're not seeing a currency pair, you're not simply looking, if you're focusing on fundamental analysis, you're not only focusing on the pair on the chart, you're also going to have to get background at what's going on in the economies of those countries. Again, lots of time. Which one is stronger, for instance, and then you look for buy the strongest, sell the weakest one. There is some indicators where you can easily see that. One of the problems I've seen with those, which shows you the weakest and the strongest, is there's just different methods to try and to determine that. So you must and from my side, I don't know which one is better or worse, because I don't focus on fundamental analysis. But you must just test it, back test it very well before you do it. And back test, in a sense, is not going to work, because if it's a free one on the website, you're not going to be able to see the back, the historical data. So you have to actually test it before you start trusting it, test it in a live market on a demo, see how the actual price is tracking what they say is the weakest and the strongest. Because to be honest, there is sometimes a correlation, sometimes not. Okay, so how do we analyze a country's economic condition? This is fundamental, this is core to fundamental analysis. Right. Obviously, the economic environment, what is going on in the business of that place? What is the different indicators there? You've got you can look at reports that gives you the inflation, the GDP, the employment, the finance, the monetary policies. That's how the banks handle their lending, their different lending policies and stuff. And what you want to know there is in the beginning, it's going to be like a whole paraphernalia of things it's lying for you. And that's part of the problem with this. That's part of why to do it really well, you need not only a degree but experience, because you're going to tie it together. You must understand what it means, finance policy, the monetary policy, and that's going to take time. And then you have to all tie it together. What does it mean? So this presentation is actually a warning more than, like I said, trying to make you an economist or something. Okay, and then there's obviously other factors, government policy, international relationships. For example, if you look at what's going on between America and China at this stage, it is having a serious effect on the price charts and what people think about value and their confidence and so forth. So, and even in those charts, you can see small trends. If you go to the lower time frames, you see those beautiful trends. So the fundamentals hasn't changed of technical analysis, but it's just because of these international relationships, the specific situation, there's a lot of volatility, there's a lot of ups and downs, right? So that's why I say when and to know that such a thing is happening is useful, but yes, it has limits, right? Weather, obviously, lots of things. There's, for instance, countries that have big storms, tornadoes, and stuff. Other countries that don't. It has an effect on the agriculture and so forth. So, okay, the gross domestic product. For those of you who don't know that, that is the total value of goods and services that a country produces in a certain period, and it's shown by a growth percentage. So it's either coming up and down. If it's normally going up, then it's something, it's growing, it's good for the country is producing more. If it's going down, then there's a problem. There might be a recession or there might be some problems in of the industries. All right. So a strong GDP means that it's an active economy, but it can sometimes have a temporary bubble, just like it says. Now, if it falls for below zero for 2 seasons, considered a recession. Normally, when it falls for a certain time, then obviously, you can see there's something wrong there. The definition of a recession is sometimes it varies from different people, different models that you use. So that's one of the problems of fundamental analysis as well. Sometimes people say a word and they can mean different things based on what model you use to determine. For instance, a lot of people talk about a market crash and recessions when it's actually just the normal waves, the normal seasons, the cycles of the market. I saw an interesting article the other day where a guy, what he did is he took through, let's say, about 30 years, he took all the recessions that has happened in those times, and he took snapshots of it. And then he took a random snapshots of just normal charts, every day, different time frames, and he also mixed them together. And then he said, okay, now try and figure out which is the recession ones. Obviously, he took the dates and the time frames away. And it's not obvious to see. In fact, it's impossible to see because every single day in let's say the 5 minutes, the thing, the price is going up and down and so forth. So, okay. So is it a bubble? Is it not? Some things are going to give you an indication. Again, the timing is the problem. You can know a bubble is coming, but when is it going to come? When is it going to burst? Is it really a big enough bubble? Those are things that you will know You get more insight into if you do technical or fundamental analysis, but the timing will come from technical analysis. Right. Okay, so these things you can see on charts. This is now Chinese charts, but just to show you, this is where you get the information. So you can see over a time what has been happening with this country. It went down, went up, and so forth. All right, and you can also see what is the different. If they compare countries, you can obviously see which is the stronger countries, which is not. This ties in very well to even if you don't know this. I said in one of my other webinars as well that the major 80% of all the volume in the market goes through the six biggest major currency pairs, right? So even if you don't know any of these things and you just use the major currency pairs to trade, it means that you are participating in the volume of 80% of the world's trade, the biggest countries or the biggest economics, the strongest countries in the world. The rest of them is all part of the 20%. So more risky, more volatile. So even if you don't know this and you just trade it with the main pairs, then you are safe. You are participating in strong economies, right? Okay, monetary policy. That is how the country, how the government, the central governments or the central banks, rather, how they try to keep the company in balance or the economy in balance, right? So it can go up, go down, depending on what they decide. Is the economy overheated? Then they push it up. If the economy needs stabilization, they bring it down, and it basically means the interest rate is up. Obviously, it's expensive to go and lend money. So it's expensive for companies, for persons to get money. So, and on the other hand, when they want to stimulate the economy, they lower it, interest rates of the banks and so forth, and then it's easy for people to go and get money, and then they get money easier. So it's a balancing act that they do there. Again, to see it in context with a complete picture, it's difficult. It's complex. You need experience. You cannot deduct simply from, oh, the guys are going to put up the interest rate. Now, the prices are going to go up because people are going to buy me. No, you need some more information. And that is part of the complexity of fundamental analysis. Okay, there's other markets, there's bond markets, there's a deposit reserves rates, there's rediscount rates, there's all sorts of things involved. And again, I'm going to stress it over. That's why you need a degree if you want to focus on fundamental analysis. For us technical, if you're mainly a technical trader, you don't need to understand all these things. You don't need a degree. You are going to focus on the charts, and that is the effect of what people do, and that gives you entries, that gives you exits, that tells you where you can take your profit. It shows you there. It's like footprints in the sand. I use an example of the Sun people in the Karoo or the Kalahari that can expert trackers. So the candlesticks, it's like tracks in the sand for us. We can see what the price is doing. This is what causes it, right? Principle, yeah, that's how money increases, the printing of money and so forth, how investments come in and out. A whole ball game in its own. Okay. Foreign trade, this has got to do with companies importing, exporting, basically buying and selling from each other. And if a country exports a lot, then obviously it's making money. If it imports a lot, then it's spending money. So they always have to keep a balance on that. Those figures are quite important if you do fundamental analysis. Import rises, then it means there's a lot of consumption. It can be bad for the factories of the own company. So there's a couple of things, and that's what I discussed in the second part. That even though we don't do fundamental analysis, this will, for instance, will be one of them. When those reports come out, you can deduct: is the country growing? Is it being more productive or not? So it will give you an idea, and not an idea of what's going to happen though, but it can warn you. If there's big differences there, the price might even change trend. Long-term trends might change and so forth. Right, so you've got those consumer price indexes which you can monitor. Consumer price index, very careful or very aware of that, because what they normally do is they take a basket of goods, they get a general price, or the price of everything, and then they monitor the price as it goes up and down. But who decides what goes into that? If they take a couple of products, or products that's not very okay, let me just check here. I'm going on here. Ukeme says he's joining, but the audio is not loud over here. I'm just going to check my audio here. Can all of you other guys still hear me fine? Okay, the audio from my side is quite strong. Just confirm that you guys can hear me properly. Audio is good. Right, let's continue. Right, there's an interesting question now that I've stopped here. Abubakar asked, what is inflation? Right, I think this is going to come up further, but let's talk about it, because that's also one of the important ones that gives you an overall indication, even if you're not doing fundamental analysis. Right, so inflation is basically, and again, you can get a couple of different interpretations depending on which economist you talk to. In general, when people talk about inflation, they talk about the value of money that's going down. Now, in general, that happens, especially within our economies, the governments that simply print money. The logic behind it is the more of something, the more there's available, the less the price is, the less the value is. So if governments start just wildly printing money, they push paper money into the economy, obviously it means that the value of that paper money is getting less. So that has been a big problem during the recession, or during the time we are going through. So it means that today you pay 3 rand for a bread, and tomorrow you pay 5 rand for a bread. So the same bread, but the price is just going up. The value of the money is coming down, right? A lot of nuances there. You can get stuck there for a very long time. It's also, in a sense, a sort of a trap. So I'm not expecting you guys to become economists. Don't even go there. So what I always state, what I always emphasize, is to get your cash flow going. This is a business, a micro business. To get your cash flow going, get that foundation, and the foundation is centered around technical analysis, because it's something all of us can do. We can see the effects of what people are doing, what countries are doing, what businesses are doing. Right, this can get very, very confusing, guys. I studied it. It was one of my, no, I'm not an economist, but it was one of my major subjects. And in my first year, it was a nightmare, all the concepts. In the second year, I started getting a sense of it. And the third year, it was actually nice. But still, I cannot call myself an economist. There's a lot of nuances, a lot of finer things, and it's a lot of time that you have to spend on this. That is not advisable. Be interested, yes, but it's not necessarily going to help your trading, especially not the timing and those things. Right. So, but I'm telling you guys what it's all about. This is the purpose of this thing. Okay, foreign trade. Let's get back. Right. Okay. I didn't set anything yet. Somebody said Ukeme said the audio is improving a little bit. Okay, let's go on. Exchange rate, tariffs, government policy, what they decide to do or not. I think America is at this stage a grand example of that, how government policies can affect prices and so forth. For whatever reasons they're doing it, we can see the effect in the charts, right? Exchange rates, yes, tariffs, yeah. Okay, employment, another important one. You all know the non-farm employment, what a drastic effect that has. Now, again, if you understand what's going on there and you study it a little bit deeper, it's not necessarily going to help your trading. You just have to be aware of when it happens. That is crucially, absolutely crucially important. But if you are interested, obviously every country wants, every single person who wants to work, who's willing to be able to get a job. So they want to grow their business sector that creates jobs. Not everybody understands what it means or how to do that. And so that's part of the problem. Higher education or higher employment means more money, More people have more money, more prosperity, and they have a stable income, and they can actually spend. They can invest their money, they can spend it. So if a government is yeah, okay, let's not go into that, and vice versa. If a lot of people don't have money or don't have jobs or don't have businesses or whatever, then it has a drastic effect on the country. People not spending money and the government not getting taxes, and they can do less and less. It's a very important thing for governments to control and to try to boost the the employment, the business sectors, right? Type of data that you're looking there is jobs change reports that come out, unemployment reports, earning reports, participation rates, and so forth. Unemployment claims is also an interesting one. Okay, when we finished with this, I'm going to show you on the Forex time site where the economic calendar is, and then we can I'm just going to show you a couple of things there. So technically speaking, so we can see how we can see where those things and when those things happen. Okay, inflation, consumption, that's part of the demand, supply and demand. Prices go up if demand is more than supply, because there's more people that want something. There's not enough. The prices go up. The people are willing to buy, willing to pay more for it. Logical. Yeah, here's also part of the answer. Abu Bakr say this is more about inflation. So what basically means is the prices are going up. Now, in this case, these guys are not talking about, no, this is money. This money supplies increases. This is what I said when I mean the government prints money, they put more money in the circulation. Prices also go up, but they come down as well normally when there's demand for something, more people want something. But there's a lot of guys in economics that say they don't specifically say this is they don't link it to inflation. That's why I said there's different models, there's different guys having different opinions, because normally what will happen is when the demand, either the supply, because the price then goes up and more people see, businesses see, but the price is high and they start producing this, then the price will normally come down as the supply picks up. So some people don't even include this in inflation. So they just talk about these factors here: exchange rates is lower, employment, and so forth. All right. Okay. Oil prices. Again, oil prices go up. I think one of the reasons why oil prices is on a lot of economists' agenda is because of the effect, the ripple effect that oil prices have. It's not just the oil price going up, it's the petrol going up, all the deliveries, all the services, people going to places. It affects an enormous range of people. So the oil price has a different effect on any economy in the world, any business in the world, and so forth. Okay, so what is the biggest data movers, which is the guys that have the reports that have the biggest influence on the charts? This is what I talked about when I said you have to as a technical trader know when these things happen. Get a little background, yes, that's good, but when they happen is absolutely crucial, because even on the daily charts, these type of reports are so important that they can change trends. Okay, so it can warn you, if you know a little bit about that, it can warn you of a possible trend change that might be coming. Okay, interest rates is important. Consumer product indexes is important, and GDP, the trade balance. Those are the reports that you must. We call it red news, red flag news, and there's a very nice feature on the economic calendar. Most calendars have it, but ours as well, FXTM as well. We can just see the red flags, so you don't bother with the smaller account or smaller time frames, the smaller news events. You just red flag the bigger ones. Okay, there's some questions here. Kopina, ideally, how old should the news be before it becomes stale news? Right. Actually, in a sense, before the news even comes out, it's stale news because the guys that are trading, the market movers, then already are busy taking in their positions. They've already done their research. They are before us. So, but for us as retail traders, I would say immediately if the news comes out, then as soon as everybody knows it, then it's done. Then what you see on those price charts are just people taking, based on their perception, based on their methods, they are taking positions. And a lot of guys, like I said, are sitting on the sideline waiting for that whipsaw movements to complete, and they wait for a clear market direction, and then they start accumulating positions. So my opinion anyway is that there's not so many successful news traders from a technical point of view, as well as from a fundamental view, because most of the guys they need to see what direction the market, what actions the people are actually taking based on the news. Like I said, that's the difference between what somebody says and what he does. That is radically different. You can say one thing and then do another thing, but what you do, that's why one of the principles of technical analysis is price discounts everything. When you commit, it means that you believe in what you're doing, whatever research you've done. So it might be not so well, not so intense your research. You might just have a method, or you might have done very in-depth research, and that's why you commit. But in the end, everybody can see on that chart, people are buying, people are selling, people are waiting on the sideline, and that is why technical analysis, the charts are so powerful. That's been why it's been used for so long. Right. Okay, let's go on. Non-economic factors affecting FX. Again, this is a. It sounds like it's not. It's outside of the economics, but with some definitions of economics, this is in. So there's a lot of shady areas, and like I said, you can talk to 10 very experienced economists, and might have quite different views on everything, or based on different models, based on where they've studied, based on what type of background they have and what type of experience they have. So political situations have an effect, obviously, on the markets, on the prices, causes certain things. Speculations. I think what they mean here, these are the black swan events we talked about. Speculations is when and I think it's not such a big problem now, but in let's say the olden times when there were only a few large brokerages or firms or whatever speculating in a market, they were buying and selling. They could actually, what they call, the term they use is, they can corner the market. They could corner the market. So the guys were so big, they had such big volumes of trading that they could just, let's say they want to drive the price down, they could just keep on selling. But these days, because the markets are so big, so interconnected, I mean, Forex, the turnover of Forex is more than $5 trillion a day. There's not guys big enough to corner the market, to influence the market significantly there. At some stages, especially on the lower time frames, and some of the different trading sessions, especially if there's lower volume on a certain session and a big guy comes in, he can push the price for a while, but not like in the olden times. It's simply too big. So this is black swan events, as I already explained. Huge unexpected events that like tsunamis or a war that might surprise people, that or that might be declared, that wasn't anticipated. Stuff like that is called black swan events. Natural disasters, same thing I was talking about, unpredictable things that have an effect on the market. Stock market performance, in a sense, all of this is economic, because it affects economics. But I understand, in a certain sense, you want to disengage this from the normal interest rates and the money supply and the government policies and so forth. Okay, the stock market is performance is very, very important because it's connected to business, and business is large businesses in a country create jobs. They actually want to say they make a country stable or not. The most stable countries in the world have a lot of small, medium businesses. And what happens is those businesses are agile. They can adapt. If you only in your economy have a couple of large businesses and something happens and those businesses are affected, large numbers of people lose their job, or it has a huge effect. But if you've got a lot of small, medium businesses, then it actually stabilizes your economy, and the lifestyles of people. Normally, a lot of small and medium businesses also produces a very healthy middle class, and that's also important. Anyway, political scenarios, right? Political stability, that's one of the first things. Political stability depends on how the state is being run. The state relates to the state of the currency, and that's directly correlated to how responsible, how good the government is. Is it a government that of extremes, like you get in some of these what we call banana republics, dictatorships, and so forth, where only a few people determine what happens? Or is it a democracy where a lot of people, a lot of people are interested or involved in how the country is run, taking decisions? Okay, stable political conditions mean a stronger currency, and unstable, fragile political conditions obviously affects the currency negatively. Huge whipsaws and things. And that's caused by unexpected elections, unexpected market conditions, unexpected things that happen. All right. Speculations, a little bit more about that, the act of buying and selling under high risk, right? Like I said, this is also interesting, the cornering the market. Sometimes, especially I think it was in 2008 as well, there was some allegations of companies that cornered the market, that forced the prices down or up. But when they were actually inspected, not a single company is big enough in these huge markets to do some damage. There was totally a different thing. They didn't do the foundation of all those instruments they created. That's not wrong. There's a lot of speculation. There's a lot of reports about that as well. Okay, that's investors. Speculations also. Investors speculate based on rumors. So sometimes a rumor comes out and people are not sure, and people will simply look at the charts, and if it's a negative rumor, they will start selling and see if they cannot drive the market lower. But in these huge markets, as soon as the price gets to a certain point, other people are willing to go in, and then it stabilizes again. So you can see that every day in the charts, ups and downs, wavy patterns. We don't see heavy spikes that last for long, only with specific events. Okay, that's why I also have a second part. I don't want to stand. I don't want to go too deep in any of these things. I don't expect, like I said, you to become an economist and to waste too much time going too deep in these small little things, because it's going to take years, guys. So it takes years to really get a broad understanding of this, and then it still doesn't show you exactly where to enter, where to exit. So let's see, I've got a couple of questions here. Okay. Aftab says, how do we know when the news will come out that will help trading based on technical analysis? Do you mean the retail traders should close their position and take positions after the market settle? Exactly, Aftab. What I'm saying is, if you've got an open position based on your, remember what technical analysis is. It is, we try to identify, look at the charts to identify new or the next trend in its early stages. All right, so let's see if there was a trend, you got in, you've got some profit, you've got an open trade, and the news is there's a huge report like an interest rate or something report that's coming out, and you know it's coming out in the next day, or if you're short term and you're trading in the next hour or two, yes, you have to be careful. If it's a big like the employment, non-farm employment, then you close your position, because we expect whipsaws in during those times, and during that whipsaw you might have a beautiful open trade, and during that whipsaw you are not only taken out, it just jumps before your, jumps past your stop loss. It happens time and again. So that's exactly what I mean. That's why I say what happens is not so important, but when it happens is absolutely critical, right? So because that when tells you if you've got open positions and it's a big report and you expect whipsaws, is rather take your profit and get out. If it's large positions, if you've got some profits locked in, yes, you can keep it open. You can take that risk if you want, but you must just take that risk with open eyes, right? You know what's happening, what's coming, so you prepare in your own way, right? There's a couple of interesting questions. What attack is an example of a black swan event? It's not an attack. Fuzani, Winston, I'm going to use the other name, Winston. It's just big unexpected events. I can name a few of them. One is a couple of years back there was huge earthquakes under the sea near Japan that caused tsunamis that did a lot of damage. So that is a black swan event. So it wasn't foreseen. It was not possible to know that. Sometimes it's caused by unintended actions as well. A couple of years back, the Swissy was linked to the USD, and the connection there was reported early one morning for us anyway in the Asian session. It was reported by the Swiss banks that they're gonna take off. They're gonna cut that relationship, that correlation between the two. It was artificially correlated to stabilize the Swiss franc, but they didn't warn the guys. Guys knew it was possible it could happen, but they didn't know, and they did it one early in the morning in the Asian session, and it caused havoc. There was a 100-fold move in the markets. It broke brokers. Brokers went bankrupt because open positions just jumped so far that the trust accounts didn't have any money in. In fact, I had a small. That time I was busy. I was also busy trading and didn't have an open position, but the broker I was with closed. So, and I got the money back later after all the stuff was done, the admin was done. So that was also an idea of a black swan event. All right. There's another question, Christian. Can you say something about the general risk sentiment in the market? What are reliable indicators to understand the general risk? Okay, now the general risk in fundamental analysis, that can mean a lot of things. But in technical analysis, your risk is defined by you. Every time you take a trade, you define that risk. Concerning what the market is going to do, general indicators of the general risk sentiment, the bottom line stays, nobody knows what's going to happen. Nobody. And that's critical to understand, because if you still think you know what's going to happen, then it means it creates a bias in your brain, and there might be a perfect trading opportunity before you based on the market movement, the flow of the market, the rhythm of the market. And remember, there's a reasoning behind that rhythm in the market. The reasoning is buyers, sellers, supply, demand. You understand that when you do technical trading. That's the effects of the market you're seeing. So do you have to understand why every price movement goes up or down? No, you don't. You can see the effect of it. We're using that angle to trade, and it's much more predictable. It's much more exact than general risk, general speculation, general. The market might go up, might come down, based on whose opinion, right? There's many opinions on there. That's what people says. We look at what people do. Anyway, All of this is obviously my own opinion. You get guys different opinions that mix the two. They like the fundamental analysis. They like to study those things and to see a bit of to give them a bias, to give them a certain sense. But from my point of view, from the many guys I've seen trading successfully, they don't want to know why it's going to happen. They look at the effect and they take their decision based on the effect. And in that sense, they determine the risk. 1-2% of your account, and very easy to handle mentally. You can take a couple of hits and it doesn't affect your account. Anyway, okay. Right. Like I said, I don't want you guys to go too deep into this. So I'm going to speed over these things. Like I said, Black Swan, beyond expectation. It's random events. And there's actually a book that was written about it. Brilliant book if you want to read it. So by a finance professor, so Taleb, and he explains a few things about that. Lots of Black Swan events. There's some more financial crisis.com bubbles that and wars and so forth. Okay, natural disasters. That's obviously, I would also in a sense, if it's a rapid thing that happens, then it's a Black Swan event. But if you know there's things, if you know about droughts, then it's sorts on the natural disasters. But I think there's a bit of overlap there in the two, Black Swan event and natural disasters, right? And that's just the causes of, like, let's say a Black Swan event. Okay, and obviously it affects people and their spending and the confidence and so forth. Right, stock market performance. If it's strong, then it's good. If it goes weaker, and that's again the crash. It's just a correction, guys. If you look at the charts, you will see a lot of crashes, and there's just corrections in the market. Money flowing in and out. You can see that in the stock market performances. There's sometimes correlations. That's interesting. And there's some guys that specialize in that. But there's a danger in that, because even those guys, they will tell you that those correlations are there sometimes and sometimes not. So it flows, it ebbs and flows. So it's not a constant thing. It's not something you can book. It's not a mathematical thing. And sometimes it's dangerous, because if that correlations, you have big positions and those correlations go out of tune, then it can spell disaster for you. It can cause you some losses. Right, political scenarios, things that affect the markets. Obviously, a leader's decision. In America, we can see that demonstrated very effectively. Right, this is the thing that I'm going to quickly go over. There's a couple of major economies. Now, again, it's part of analysis, of fundamental analysis. To go and study a country is a tricky thing. It's a time-consuming thing. To know that it's big, to know that it's an effect is one thing. But some people like to go and study it, go and be aware of it. If you focus on technical analysis, that's not definitely a prerequisite. But to know, and just like I said, the big currencies, this is the guys, the big currencies. This is where the most of the movement, the 80% is the major currency pairs. If we focus on this, then we are, in actual fact, already following with these guys. We've got obviously the US, we've got the Eurozone, we've got the UK, like the different names there for them. Japan, the Swiss guys, and then New Zealand, Aussies, and Canada. Right, now, we haven't got time for this. I'm not going to go deep into each of these economies. What I want to say is, if you want to study them further, yes, but again, it's going to be time consuming, and you have to know what all these things mean. So I'm going to stop my presentation here, and then I'm going to answer some of your questions. All right, so if you've got questions now, if you are interested in some of these in these countries, you can just send me an email, and then Bilal, the webinar he did yesterday, he did the whole thing. He had a different purpose with his webinar, and then that will be covered in there. So you can just send me an email and ask for for Bilal's webinar, and I can send you the link to that one. Right, let's see what questions are here. Christian, what can you say about, no, I've answered that one already. Let's see if I can find some other ones here. Okay, Osman says like the 9/11 attack on the US, yes, that was definitely a black swan event. It was unforeseen and it had big effects. Right, I see no more questions, guys. No more questions here. What do you guys think about fundamental analysis? Is there any of you that like it, that like to spend more time in it? What do you say? Let's see if we can get some reaction. We've got a couple of more minutes left. Any comments you want to make in the last few minutes? See, we have 27 people attending. Come on, guys. Any comments? I'm going to go back to my to the beginning now. So you can write, you can get my email if you want. Right, there's my email if you want to write it down. So let's see. Peter says that he finds it useful. Thank you very much. Appreciate it. Osman says, yes, it's nice. Bashir says, how can I know financial markets? Bashir, what do you mean? How can you know financial markets? There's basically, while I wait for your answer, there's basically two things. There is the way you study markets are fundamental analysis. That's when you go deep into this report, you understand the cause, you try to understand the causes. And then the other side is where you study the effects. That is technical analysis. That's basically the way to know the financial markets in a practical way. I mean, except if it's like that's what we're doing here. But for some guys, it's just interesting, like reading history books. But that's not the purpose why we do it here. Here we do it for as a business. So we want to make money with this. We want to build a skill set that we can use to actually produce money. Right. Winston says, do you perhaps have face-to-face classes? Winston, we use, if you've ever heard about the fourth industrial revolution, so go and Google it if you don't know what it means, fourth industrial revolution. We use the fourth industrial revolution. It's the tools basically centers around the internet and cell phones and computers and the access that it gives each other, the fact that space and time is it basically shrinks space. It makes it causes the fact that you can listen to me and you I'm in my study, my office, and you in your lounge or where you are, your study, in your house, what you're doing. So face to face now, I don't come to people. We have seminars though, but we do Skype sessions, Skype support sessions. So again, take my email me, and then we can actually do a Skype session where we talk face to face and we meet each other, and you can ask questions and we answer that. What our strategy with that is in Forex Time and the training is we go to people, seminars and workshops. We actually go to the people and meet them, but obviously that's limited. Not everybody can come. And then as follow up, we do Skype sessions. So everybody to do this business, you need a computer, you need internet access, and then if you put Skype on there, then we can take the training further. The purpose of the seminars, and I do a lot of seminars on Skype as well for people, is just to give them a background. Lots of guys are beginning or they're stuck. I don't know why they're stuck. So we give them a background. I talk about that foundation. It's so important. And as soon as your foundation gets into place, then it just starts working, guys. That's obviously more the technical side, but it just starts working. It is like gravity. So it works. So if you work in sync with it, then it works. Right. Let's see some more questions. Bashir says what? Oh, let me go down there. Face to face, yes. Do you only trade fundamentally or technically or both? Jonathan, I trade mainly 90%, 95% is technical analysis. So that is for me, I study the effect of the price changes. The 10% that I do look at is only to see when those news events are. So I don't bother what they're going to say. I don't try to find out what they are going to implement, because I know nobody knows what the price is going to do anyway. So I spend my time studying the effects, or looking at the effects of of the price changes, and I've got a simple, well-defined method that tells me when to enter, when I've entered. I know exactly where, if the market doesn't do where I'm, if the market doesn't do what I'm expecting it to do, then where I'll protect my account, and if it does do what I expect it to do, then where I take my profits, so how I manage my risk over a series of trades. Right, that's personally for me. Right. Bashir says, what book? Yeah, that's a good question, actually. What book is advisable for me to read about the financial market? Bashir, there is so many books over there. When you go and study, I've talked to, interestingly, to a lot of guys that have studied economics, and not even in the, if you look at different institutions, that different universities, they don't even use the same books. There's thousands upon thousands of books. So that's not an easy question regarding fundamental analysis. But technical analysis, you can get your training on the web. Even our website is very useful. But there is books that I like, Trading in the Zone. I think it's, I can't remember the guy's name. Trading in the Zone, you can Google that. It talks about the psychology, the way traders think. That is worth it. So I've got a summary of that. So you can also email me if you're interested in that. So you can look at the summary before you buy the book. But definitely for me, my experience, and a lot of people that I talk to, if you want to invest in books, you want to pay some money for it, then the one or two about the psychology of trading, it's going to help you a lot. Right. Okay, we've got some 5 minutes more. Please, guys, if I don't answer your question, please email me, and then we can take it from there. We can either Skype, or I can answer you via the email. So, right, so let's try and get all of them done before I leave. Confirm certain technical moves and thus support your decision to buy or sell. What do you think? That's technical analysis, yes. If you understand what technical analysis is about, the fact that it's in essence, it's just trends going up and down. And what we do with technical analysis, we try to identify the early stages of the next or the new trend. Then it becomes easy. Then you simply need to look at those markets, start to see that rhythm in that market, and then you see those turning points, and then you choose a couple of indicators. And somebody asks, what's the top 3 indicators for me? You choose some indicators that make sense, that will actually show you to take those change over times. When there's a downtrend and it changes over to an uptrend, and there's a reason for that. Prices get very low, and it becomes a bargain, and buyers come in. There's a logic behind it. The only thing your indicators must do is to help you to identify those changeover points, that when the balance of power is swapped. So, and indicators, top 3, the ones that I like, but there's a lot of overlap, guys. There's hundreds, I want to say thousands, but let's keep it at hundreds of indicators. But the basic ones are the powerful ones. So the ones I use is just a few. It's just a few moving averages, because they make sense. They tell you the average price over a certain time, and the price is always going back to value. It goes back and it comes back to value. And then I use the momentum indicator. So I've got 2. In my case, I've got two moving averages and a momentum indicator. But the momentum indicator, the MACD, the RSI, they overlap very much. So what you're going to do is for yourself, is you're going to experiment. But first, before you do that, you must see that rhythm in the market. You must see those beautiful moves. So that's what when we do training, then I teach the guys, before we give them a method, they must be able to see those rhythms, because the method is only going to help you to see the changeover points. Okay, I can talk a long time on that one. Okay, one more question that I'm going to go off top. What do you think of the US-China trade war? It's going to be going on for some time. I think there's a lot of corrections that's happening. China, in a sense, they're a very efficient company or country, and they're very efficient regarding to um, their manufacturing, and the Americans are starting to, they want some of their manufacturing back. That's just my opinion. And this war is just trying to get a balance. So the war might take a while. Not a war, a trade war. That's getting that balance back. I think America, the president wants to strengthen their factories, their industrial section that has largely been almost made null and void because China has been able to be so efficient to make things so cheap. And yes, and it has had a deep effect on the industrial section of America and the people. Yeah, I think that's why they voted for Trump, because they knew he's gonna do something about it. So I expect it to be for a while, but nobody can really say. Right. Thanks, guys. I'm gonna go off now, and thanks for your time. Hope you learned something. Okay. Goodbye.